Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business and economy trend stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. India's real estate industry has pushed back on a call from the Reserve Bank of India Governor Raghuram Rajan to cut home prices. Now, realtors say it is unviable for them to reduce prices, while Rajan has said that with interest rates down, it was time for developers to start cutting rates. Now, the industry has argued that home prices already come down 35 to 40%, at least in some areas, and is now asking for further cut in interest rates before they respond. The question is more fundamental. How many Indians can indeed afford property at the current mix of interest rates and home prices? And does the market still favor well-to-do buyers who typically buy multiple homes as investments? Or can new buyers get in? To discuss this, I'm joined by Gulam, Executive Director at Real Estate Consultant Knight Frank India, and Zaheer, Memon, partner at Mumbai-based developer Zara Habitats. Thank you both for joining us. So let me begin with you, Zaheer. So the first question really is, why aren't prices coming down?
Okay, first of all, I would like to revert to that with a very good thing. Definitely, the Honorable RBI Governor, Mr. Raghuram Rajan, has got a very good sentiment behind saying that, or behind giving the statement, urging the developers, across pan-India to try and reduce their prices. But having said that, see, it's not as simple as that. I mean, if you just look at it, it's not that we developers have been only making profits and, there is no looking back at that. Costs have definitely, like you rightly said a while back, costs have definitely pan-India come down quite a bit. So it could be starting from 15% to right up to 35% in certain areas. That has also been market driven, not necessarily by developers themselves. But if I speak on my behalf or for my company, because we are based out of Mumbai, if I look at Mumbai in a nutshell, we have a lot of costs that come along just to when you're making a building. So it's not only a cost.
Give us an example. If you could break it down.
What happens is, as a layman, a lot of people have a query that cost of construction is how much. How much is the cost of construction? So you got a lot of profits to make. But what goes behind the scenes is what people don't really realize, that for us, right from the time we acquire a project, cost of acquisition, then cost of approvals, cost of premiums, then cost of raw materials, labor and everything else, all that adds up to a lot of cost.
So when you say approval cost, you mean the time it takes? Because
it takes, exactly. So even the cost of borrowings, I'm sure a lot of people have been borrowing. It's not an independent, you cannot really, so you have either private equity funds, you've got bankings, NBFCs, other bodies who finance projects. And in that circumstances, what happens is, if there is a policy paralysis like we definitely felt a couple of months back and in a couple of years back, in a situation like that, what happens is your interest is ticking by the day, and that definitely has to be loaded in the project, because you cannot really recover the money anywhere else.
Okay. So Gulam, what's your sense? I mean, it's not often that the Reserve Bank of India governor goes out and says, or to a particular sector, in this case the developers or the realtors, that please cut back the cost of homes that you're selling. Why would you do that then?
Well, if you saw the smile on my face, something just struck me that he is in the most unenviable position. Earlier when he said that the bankers have to reduce the rate, they haven't. Now he's talking about developers should. I have to just see whether even they follow the track or they also refuse to reduce rate. But
which at this point they have.
Yes, well, it's just about beginning. So I'm sure, as you said, these are two very important points which any developer, any buyer's decision making depends upon. One is the price that they get from developer, and the home loan interest rate, which ultimately RBI at least has some say or some decision making criteria they have. So if both of these are not coming down, then the problem of demand coming back in the industry will not happen. And currently, when anybody asks me a question, why is real estate industry the way it is today, the only reason, the sole and only reason, is that the buyers are not willing to sign the dotted lines. And unless we bring the buyers back, nothing is going to move. So either
but is interest rate a predominant reason for why buyers don't come back? Because I don't know, my sense is that, the rate of interest, while it may be high, is not the deciding factor, isn't it?
Well, it is. It does, because...
will I postpone a house purchase, particularly if I am a buyer who's going to live in the house, because the rate of interest is 0.5% higher?
You see, what you have to see is how many thousands are you paying for every lakh that you are borrowing.
Sure.
And that definitely has an impact on one's overall capital that one can raise. And that, if current rates, for example, may give me only a 2.5 bedroom hall kitchen, although I require a 3 BHK. So I have to wait for even that 0.5% to come down for me to afford a 0.5% of a bedroom.
Got it.
So
Okay.
it's that kind of an argument.
So
that
you're
we can
saying
come to.
interest rates are a key, sort of a big culprit in the whole process?
One of the major reasons. Obviously, the other is the price,
Okay.
which I'm sure we'll have to discuss whether it should come down or not.
Okay, so what's your sense? Should it come down? I mean, can it be brought down?
Well,
I
if
know
I'm
it's a
talking
blanket
about,
question, but yeah.
Well, if I'm talking about free market, well, the buyers are, at least currently, buyers are going to decide. Because if there are hordes of buyers out there, the developers can take a call. But unfortunately, that's not the situation. There's too much of inventory in the market. There is too much of interest from the developer's side to be in the business, and they can't be in the business
Right.
unless the buyers come in. And today, buyers are not very keen to allow the situation to change.
Right.
So in free market, buyer is asking for a lesser
Right,
price.
so that's one of the charges buyers levy against the builder, saying that you guys are holding on to stock and not selling because you want to wait for the price to come back.
See, Govindraj, what I would say is that they are not completely wrong. And that would apply to a couple of business houses, I may say it might. But it's not, like you said, it's not a blanket rule for everybody. There are different reasons for different projects. Again, see, our country, if you see, is wide. And we have, if you see the pan-India, real estate sector presence, then every city, forget about states, I would say even cities have a different criteria in different locations. So you cannot, the rule of, you can't apply the same
South
rule or
Bombay
same,
will not apply
will
to-
never be the same. In fact, even DCRs are different for South and North. So, like I said, yes, so there was, in the past, there have been developers, they've definitely been charged with an allegation where they've been hoarding. But definitely things have changed. Now it's not that. As he rightly said, yes, in terms of the interest factor, what used to decide even today, definitely there is a certain segment of people who are salaried, who have a very calculated, who are
So
on
amongst
fixed
the people
income.
who buy your properties,
Yeah.
what's the ratio between people who are buying for the second or third time versus people who are buying for the first time?
See, we have been doing projects outside Mumbai as well, but that's what decides the thing. So if we are doing something outside Mumbai, we belonging to Mumbai, definitely our customer base is also from here. So they would definitely look at it as a second home. But we have local customers as well who are end users who are going to be occupying that premises. But when you're talking about Mumbai city and projects in Mumbai, definitely locals are the ones who are going to be occupying it for their primary residence.
Right.
And we are looking at something.
But are you seeing any trends or shift in trends there between the number of people who are trying to buy or buying for primary residence
No,
versus?
at least that's what I like. If I can talk for myself,
Yeah,
then
yeah.
I would say we are definitely catering to people who are going to be end users.
Okay.
We are more catering to people because we are making sizes that would appeal to all budgets of right from the starting to. If someone who has an extra budget could probably knock down a wall and make 2 flats as one, I mean, if they have the capacity to do that.
Right.
But we don't want to say no to a customer who has a limited budget but who wants to live in a very good
So let me
location.
take a step back. So your sense is that the market is stable now, or
Well, in what sense is what?
in terms of the rate of purchases that you see or the interest levels that you see amongst buyers?
I would still say, I don't know. Yeah, the interest levels definitely, I mean, it's really commendable on the part of the RBI governor that in the last fiscal year, we have got some very good benefits in terms of a home loan ticker.
Yeah.
He's got some decent benefit in terms of interest rates. But yes, even sentiments, I think sentiments is what controls a lot in an economy like ours.
And that is at this
And I'll
point?
tell you what, no. So in that, it is not just about the money part of it, but it's also confidence. What has also shaken up real estate market is the confidence that a buyer has on a developer. Performance, delivery is what matters today. I think the one who can secure your possession and give you a possession on time, promise you and deliver you what he has been promised on white and black. I think that is what will help a lot of people getting that the whole confidence to come and buy. I think when you're buying something like an apartment for your life, people don't really, not everybody would really look down at that 0.25 or 0.10. That's what I
Gulam?
feel.
Sorry?
What's your sense? I mean, do you think people are, I mean, if you were to look at the reasons why people buy or don't buy, confidence in builder, interest rates, or the real interest rate, actual price of the home, what would really matter more?
Look, first of all, the requirement of housing, I would rather segregate requirement from demand. The requirement exists. Now, when we talk about demand, typically we end up considering demand as only purchases, but there is a huge a size of the population which would rather rent it out instead of purchasing, but that has an indirect impact on the overall demand supply requirement. You need some investor to buy that in order to rent it to somebody else, third party. So here, if I'm looking at the overall scenario, today, while there exists a requirement, but people are not buying, a couple of things which I will pick up from what Zaheer was talking about. To begin with, the sentiments are not yet building up in the economy. The job security, the guarantee that if I'm taking a 15-year loan, I'll have all 15 years of enough money to pay those EMIs is a big concern. Many of them don't know if that job that they have should it last for next 2-3 years or not. So people are afraid of those gaps which perhaps can come in the 15 or 20 year horizon, that they'll have to repay the loan.
Right.
And that's the first and foremost thing. Lack of confidence in overall job economy.
So that's interesting. So there's lack of confidence on the job and the job outlook, and there's also a lack of confidence in the people who are developing properties.
Then it comes to that. Now, curiously enough, I would still say that the developers, I would not blame them entirely for whatever is happening today, because they're also in this situation because they're unable to sell. Assuming a situation where they were selling thousands of apartments by the day, they would never be in this spot. It's only because there is no demand, people are not buying it, that they are here. If I look at it, why people are not buying it and try to go to the root cause of this whole thing, ultimately it lies somewhere in the lack of confidence in the economy. The moment that is back, all the developers will also be back in action, and they have earlier done this, and I'm sure even today they will be in a position to deliver in the timeline that they have promised. Currently they can't do that because they don't have money to finish it.
Right. Okay. So let's ask the first question again. We started by asking that the governor has given a call for home rates to be reduced. The industry is pushing back. So why is the industry pushing back, and what lies ahead?
So basically what I feel is, see, it's not, like I said, it's not an on and off button, we cannot just one fine day get up in the morning and think about, okay, you know what, let's give a 20% discount to everybody. So I think
because
not
you've also
only
sold
us,
properties at a higher rate to maybe other people.
Not really higher rate, but at the same time, see, a business has to make sense in terms of even your books. I'm not saying you have to make all the profits out of one project, but at the same time, there are certain calculations that a developer goes and does before he picks up a project, plans it, and by the time he executes it and sells it.
Right. So, and you're saying at the current stage, this is not adding up?
Not everywhere. See, that's what I'm saying. Yeah. My thing is that, we cannot have the same thumb rule for every city, every project, every area. Because there are different costs behind the scenes, a lot which are not really, I mean, if I really sit and jot it down in front of a customer, my customer will get bored of it, because listening to it, okay. So, but the fact is that there are costs and we cannot just one fine day.
Fair enough. Last word, Gulam, we're running out of time.
Well, it's
unless... What should the industry do? Or what should we do? What should be the policy response, if any?
Look, obviously the first thing is we have to wait for the buyers to come back to the market, which is completely dependent on economy. But in the interim, there are lots of defaults. There are a lot of issues that so many developers are facing. So I guess here it calls for action. That action can be if you have to sell the yacht that you own or the aircraft that you own. So please do that. Pay all your money back and get back in action. The problem is that you also want to hold on to all the luxuries of your life, and you also don't want to deliver the promises that you have made to the people. So I would rather say this is the time when you have to, even if you have to cut a few losses here and there, do that and get back in action. At least remain in business. Maintain that confidence that people always had in you.
Well, we need to go in for a break, but coming up on the other side, India's non-performing asset problem widens, and Moody's has come out with a somewhat concerning report on India's rating. Stay with us. Welcome back to Policy Watch. Rating agency Moody's has pointed to India's infrastructure deficit as a major concern area, adding that a history of double-digit inflation, elevated government debt, weak infrastructure and a complex regulatory regime have constrained India's credit profile. Now, the problem of funding infrastructure and other projects is in turn held back by the relatively weak state of India's banking system, hobbled by a large non-performing asset base. So the question we are asking today is the NPA problem showing any signs of change or improvement, particularly since more institutions like the Life Insurance Corporation of India or LIC also appear exposed to it, or will it take much longer? Joining me to discuss this are Madan, Sabnavis, Chief Economist of CARE Ratings, and Debopam, Chaudhari, Chief Economist at Zyfin Research. Gentlemen, thank you both for joining me. Let me begin with you, Madan. So to what extent have we understood the NPA problem? I know this is a question we keep revisiting almost every quarter, but as we stand today, where are we?
No, I think we're in a better off situation in terms of recognition, because earlier we had this tendency to brush aside NPAs and call them the corporate debt restructuring, the CDR. Then at some point of time we got to know that banks were treating NPAs in a different way, like you treated it as NPA, I didn't because I was being serviced. So I think a major achievement of the Reserve Bank of India is in terms of making sure that we all recognize what an NPA is. Now the next thing is that once we recognize the NPAs, a bit late I would say, but what really happened is that all banks have to reveal the NPAs, you have to make provisions for it, and I think a lot of the public sector banks in particular took a hit in the third quarter, which we hopefully feel in the fourth quarter things should stabilize. Now, subsequently, I would tend to believe that the NPAs would be driven more by the economic cycles, and if we believe that the Indian economy is going to recover, definitely there would be a tendency for the NPAs to slacken in terms of pace of growth.
Okay, so let's sort of take a minor diversion there. Debopam, if you were to link it to the Indian economy, are things likely to improve on the non-profit assets?
So before I respond to this question, there's a small viewpoint I have, which is my personal viewpoint on these rating agencies. Had they been half as careful during the 2007-2008 period, we would never have sort of encountered this entire global financial meltdown, which is giving its jitters even today. Saying this, nevertheless, Moody has highlighted some of the key challenges Indian economy faces, and of course NPA is one of them. But the other good thing that the Moody is talking about India is they have acknowledged the fact that the policy reforms, gradual policy reforms are
having an impact.
And they are specifically being targeted to FDs, to improving bank balance sheets and inflation. So improving bank balance sheets is something which is already underway. So NPAs, if you have to draw an analogy, is nothing but a disease which has been detected, and the RBI as a hospital or a doctor is already
so that's the banking system, right? So the one concern which sort of emerged suddenly was the fact that you had LIC, which is obviously not under the Reserve Bank, suddenly revealing or being forced to reveal that there is a 4.23 NPA provision or NPA percentage sitting on its balance sheet. So isn't that worrying?
Of course, it is worrying. The entire NPA scene in India today is worrying, but I am hopeful that, as Sir also mentioned, it is now since it has been detected and precautionary measures or rectifying measures are being taken, it is now connected entirely to how the business cycle unfolds.
Right. Okay. So one is the business cycle. We are also talking about, at least in the context, since we are using Moody as a start point, our infrastructure funding needs. So where do we stand?
See, if you look at infrastructure, the requirement, of course, is very large. Now, given the fact that infrastructure itself is a very dicey proposition as far as the private sector is concerned, I think the onus really falls on the government to do something about it. So we have the central government, we have the state governments, they are the ones who are going to provide the impetus for infrastructure expenditure. And today we have seen that notwithstanding the fact that we say that the government is spending a lot on infrastructure, if you look at the budget numbers, it's around 1.4 lakh crores, which is actually a very small amount, maybe just around 1% of our overall GDP. And they have their own fiscal constraints, so that's one reason why the government has not been able to do. The state governments are having a problem because once with the Uday scheme kicking in, they'll have a problem in terms of matching their fiscal deficits. And in terms of the private sector, I think substantial issues in the areas of land acquisition as well as environment still remain. So I think in terms of enthusiasm to go ahead with more infrastructure projects, but these were the main projects which actually got stalled in the last few years, it's going to be very, very slow. So I think the way India has been operating is that it's more a case of saying that if I have the finance, I provide the infrastructure, otherwise I don't provide it. So it's a case of saying exposed to demand is equal to supply, but the fact, and everything is being driven in terms of the resources which are available. So I think this kind of a deficit is going to remain for quite some time until we have new avenues of finance, and we are also able to address the more administrative issues which are more in the policy domain.
Right. So let's talk about the longer term financing needs of infrastructure and how they could be met. Debopam, so where would you start if you would?
We definitely need a lot of innovations apart from the more orthodox ways of raising funds. And one great step which the government took last year on June, this fund was set up, is the National Investment and Infrastructure Fund. And already we have got commitments from many countries who are interested in putting in money into this fund. So these countries include Russia, these countries include UAE, USA. In fact, UAE has already signed an MOU in February of this year, if I'm not wrong. And the fund size, the targeted fund size, around 40,000 crores Indian currency, from where the government is committed to put in around 20,000 crores, and remaining 20,000 crores would be raised from such investments from such countries. So this is a fantastic new way of raising funds for infrastructural spending. Other is we need more innovations in PPP, that's public-private partnerships. We need more of such PPPs, because PPPs has been a success. If you look at the kitty right now of infrastructural spending.
But the feeling also is that it's been a failure.
But then if you look at the kitty, as I was saying, around 30 to 35% of the entire infrastructure spending is now being financed by private players. So we need more innovations there. The way it is right now may not be working, but this is the right way.
You're saying within PPPs, like the hybrid PPPs and so on.
Exactly.
Yeah. Right. So if we were to look at the contribution of the banking system to all of this, is the banking system in a position to do so in the next 2 or 3 years? And to what extent? Obviously it will, but to what extent is the question?
Well, they may not be in a position to do so over the next 6 to 8 months, but with the amount of focus the RBI and the government has in order to clean up bank balance sheets and to rectify the issues that we have already cropped up in terms of NPAs, I feel by the start of the next year, we'll see banks becoming much more proactive in lending to infrastructural projects.
Okay, do you concur with that?
No, not really, because I think the banking system is not in a position to finance such projects which go on for long term, and ideally we'll have to shift towards the corporate bond market, which is not developed. We've had lots of things being done by SEBI, RBI, but for some reason it hasn't really developed. But I think a very constructive move which has been taken by the RBI, brought out a discussion paper last year in terms of moving large exposures to the debt market. And I think the budget was also specified in this year that there will be certain positive action taken, probably by 2018. Because ideally banks are not meant to finance long-term infrastructure. And the fact that they're doing it and also running into problems of NPAs is probably not the right way to go about it. Because I think the kind of banks which we have today in India are quite different from what we see globally. And globally, it's always a case of using the debt market, where the bank would probably take a position in the debt market rather than lend directly to the player. So to my mind, it's the debt market which is going to support infrastructure to the extent it can, foreign direct investments, ECBs. But I don't think the banking system itself will be very keen to do it, given the fact that the NPA problem will take time for it to subside.
But you're also saying that since it's not a major contributor to the overall kitty, then at least in the terms of interest.
No, presently actually it is, because if you look at the overall bank finance and look at what proportion of it is infrastructure, if I remember right, 25-30%.
So you're saying if we move on other sources of raising revenue or raising funds,
we'll be able to satisfy the infrastructure requirement as well as control the amount of NPAs which can be created here.
So then where should one look? I mean, in the interim period, well, you talk about the debt market, you talk about other sources.
No, I think until such a thing happens, we won't be having the infrastructure, because if the last 20 years of Indian economic history shows that it's just a case of if the funds are there, I do it. If I don't have the funds, I don't do it. So we'll continue to be deficient in terms of infrastructure in most of the spaces. And when we talk of, say, roads or railways, that's something which is primarily the responsibility of the government. It would happen out there to the extent that they're able to provide it.
So, but you're saying that's not enough, clearly?
It's not enough. I think that magic number of $1 trillion over 5 years we've been talking of, I think the number very much holds, and in fact it will be getting inflated. But we just don't have the resources for it right now. Okay. So I think we'll continue to remain a deficient country for quite some time, at least for the next 5 years or so.
Right. And Debopam, do you agree with that?
Yeah, absolutely. Infrastructure won't happen overnight, but confident steps would be taken towards it in the next 6 to 8 months is what my feeling is. But then these steps to actually start showing results would come in the next 5 to 7 years, as Sir rightly said.
Right. And to what extent is this affecting the overall health of the economy, Madan? Because the same point that Moody's is making, that there is an infrastructure deficit and this will constrain the ratings profile in future.
No, I think let's separate the two issues, because when you're talking of what the rating agency feels, it's about...
No, I mean, in terms of using what they say as a trigger for our discussion, not necessarily an analysis of why they're saying it.
If I look in terms of infrastructure, see, one thing is that when we have lower level, if you look at overall investment in the country, it comes from industry and it comes from infrastructure. Now today, investment is not taking off because industry has a certain problems in terms of having surplus capacity. So it goes back to saying that, is my infrastructure investment really taking off? And that's where the answer today is definitely not, because again, for the same reasons which we have discussed. So infrastructure is definitely required in order to prop up investment, which will prop up GDP growth. But in terms of the deficiency in infrastructure, I think we've had high growth rates, notwithstanding the fact that we've had deficiency in the infrastructure sector. A simple thing like power sector. Electricity generation has generally been good, but we have major problems in terms of transmission, in terms of distribution, which could have probably made things much better in case it was there in place. But to say that, can I get a 10% growth in GDP without infrastructure? Probably we could still manage it, because if we look at the overall growth is contributed by different sectors, infrastructure is one of them. In case infrastructure does...
No, but infrastructure to enable the growth of other sectors, isn't it? I mean, if you're talking about ships and ports and airports and things moving...
No, like we've had maybe...
but we managed it earlier, you're saying...
We managed it earlier, we could still manage it for some more time. It's not to say that growth is going to collapse in the economy because my infrastructure funding hasn't come through, because our past experience doesn't show such things. So it has to be done in order to accelerate growth, but I won't say that... And sustain it, but I won't say that growth is going to collapse or growth is not going to take place if I don't do this. Because the other factors which drive the economy, the services sector, consumer demand, government spending itself. So this is just one particular piece in the overall block, which needs to be addressed.
Okay, Debopam, is you also equally...
Yes, another major aspect of spending or budget financing infrastructure would be FDIs through NIIF or whatever. And a key driver of FDI would be how we project ourselves, what the perceptions are. And these reports, which you are just talking about, the Moody's or the Fitch reports, outlooks, play a very significant role in that. In fact, interestingly, traditionally, every May, all these rating agencies, they will start visiting the North Block in order to get data points, in order to come up with the outlook for the next 1 year. So I am pretty sure that this year the entire Ministry of Economic Affairs will be working hard to convince them with data points on the reforms that they have designed and the targets that these reforms have, in order for them to reduce the weightage that they are right now placing on NPAs and the effect of NPAs on infrastructure spending, etc. So that's an opportunity for us to
Right. So you're saying there's some selling involved in this, and we should therefore sell aggressively and make sure that people get the right
marketing and selling.
Marketing and selling. Madan, last word.
So definitely, I think.
Can we save? Yeah, you're saying so. One is, of course, you're saying nothing's going to collapse. Secondly, with the right amount of marketing and selling, as Debopam says, things could actually.
It could, because I think convincing the rating agencies whether or not it's really pertinent is a necessary evil, because of the fact that if we want, the thing is that the government of India doesn't borrow in international markets.
Right.
So actually the rating doesn't matter. But if an Indian company is trying to borrow, I'm constrained by the BBB minus rating which I get. So I think convincing rating agencies is definitely essential, and taking positive action is important. But I think translating the same thing, because I think almost for the last, I don't know how many years we've been talking about having the right policies, lots of announcements are being made. But I think there's something fundamentally holding back the growth in infrastructure. We all focus on the financing part, which is one aspect of it. But in terms of starting off a project, completing the project, I think we have not been very
execution. Right, we've run out of time. Thank you so much, both. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.